Welcome to Learning Insights by AllCloud. This is our platform where we are reeling our thoughts on the lending industry. And today is a very special podcast, a full house, of course, in collaboration with ID5. We have our three distinguished guests who will be throwing a lot of nuggets of knowledge, light on the MSME sector, the MSME lending sector in toto. So now, guys, let's dive into it. I would like to introduce our guest today. We've got Riju Ray, Chief Business Officer, ID5. We've got Ajit Menon, Group Head Operations of Everything Capital. And we've got Shaunak from TransUnion SSPL. So quite a full house, a very diverse, a very diverse forum here that will be discussing various aspects of MSME lending.
Rahul, how would you actually evaluate, for example, parameters like these in as part of your evaluation product?
So what we do is we take those data sets that are really important for the lender to analyze and put them on one single dashboard. So they can, as we said earlier, correlate them. Specific data sets like the device risk can be incorporated to see how it performs. What is the kind of rating that we receive and how those loans perform in a series of time, and then we can put it back into the model. So again, as we said, it's again recreation.
It's like a regression of that.
Yes, You have to always be end use of funds, regular touch with the customer, getting the data back to the LMS, because again, this is the core truth of the business. It has to be fed and has to be nourished. If it is not nourished, then it's of no use.
Yeah.
Right. So that's where we.
I think the world of finance is it's a very hands-on business. Right?
Yeah.
You can't have passive people driving a business.
Correct.
Be it any function. There is no function in NBFCs and banks where people or functions can be passive.
Correct.
It's a very active, hands-on role.
Yeah.
Every role.
I remember on this one, there is a phrase said, "Nazar hati, durghatna ghati."
Absolutely.
Yeah.
Absolutely. Yeah.
And I don't know if you work on early warning signals also, but for MSMEs, that's so critical that you can't forget a loan once you've just underwritten it.
Absolutely.
You have to watch it through the life cycle of the loan. Yeah.
And multiple touch points. That's the point I was trying to make outside the room.
Yeah.
That it's not one view on the client. You take a sectoral view and you take a customer view, and there are many people taking a view on the client, and then all of these points have to converge. It has to converge, right? If it doesn't converge, then either you have baselined it incorrectly, or there is something wrong in the data, or there is something. I mean, that points to the fact that something's wrong, and it forces you to go.
Something not has been done right.
Yeah.
Yeah, I wanted to really pick your mind on the co-lending bit. So, the question that I have is that when you are lending directly, you're in much control of the data. You have everything together, you're putting into models, analyzing, and then your credit risk team is much involved. What happens in a co-lending arrangement? Because you've said earlier that the retail side of the lending, you've kind of worked with a lot of partners. How do you make sure that the kind of diligence that you have in terms of your credit assessment passes down to the partner and they're able to give you those data points back to you?
I think it is largely tech-enabled. It's part of parameterization.
Okay.
So everything in co-lending, in retail co-lending, I don't think there's anybody better who does it today than us. I could say that with pride. Is because for you to institutionally scale up a co-lending partnership, you need to have a couple of things very clear. You need to be clear the segment that you're going after.
Okay.
The
Niche.
segment within the niche and the asset class. What is your risk appetite? And what is it that you want to grow? At what cost do you want to grow? There are NBFCs which would not want to take the names of those NBFCs, but somebody went to the CEO of the company and said that, "Hey boss, listen, here's my GNPA is 2.5% on a book size of 25,000 crores. He said, ain't good enough. You can be at 8% GNPA, but I need the book to be at 1 lakh crore. Right? So there are different ways you look at it. Right? So you want to grow, but you want to grow at what cost? Right? And if you are growing at a certain pace, then are you really essentially assuming and protecting yourself against any downsides by way of levers that you can pull finite number of levers You could have an FLDG arrangement. You could have a cash collateral. You could price it in. You could have a high ECL for a loan. And you would say that okay, I'm okay to take a bet here because it is giving me yield uplift somewhere else. At an aggregate level, what are my IRRs looking like? So it is a conscious call that you take because not all partnerships are uniform. They are different as chalk and cheese, and the risk models are different for different partnerships. So you would need to have a system which accommodates for a degree of variability when it comes to all these partnerships. Okay. And the risk appetite is also slightly different when it comes to these partnerships because the deal economics are different. The size of the book is different. The exposure that you are putting up with that at an enterprise level, it could all accumulate to a value, but it's up to you to decide. Okay, do I draw the line here at 200 crores with this partner, or do I bump up another 50 crores or bump up another 100 crores, or should I take a bet of going up to 400 crores? It's a comfort that you need to take.
How does the partner give you comfort?
The partner gives you. I mean, you've got to look at the cohorts and you've got to look at the traditional in co-lending. There is a lot of reliance, especially on asset classes like two-wheeler finance, used commercial vehicle finance, plant and machinery, SME loans, personal loans. You've got to rely on bureau data because that's how you look at your cards and then you decide that this is the line that I will draw it. I'm okay to lend to anybody, with a score of let's say 700. Then I need to. There are other, factors as well. A certain, demographic marker like an income, PIN code, etc. And then, a certain type of a job, or then if there are those markers available, and then decide to lend to that. So those parameters are already programmed, and then those filters are tested in a UAT, and then the data flows in.
So just to like rephrase some of the stuff that I look at it from the lens of how data flows through organizations a little bit. So one is, of course, you've got contractual arrangements like FLDG where you sort of agree the risk between the two parties and the parameters of that relationship.
The first loss, essentially.
Yeah. So, you obviously have to have that trust between the two teams in order to operate in that function. Of course, there are processes that you build to ensure that there are guidelines to this, right? Now, guardrails to this. Now, beyond the fact that these contractual parameters and partnership processes are in place, it's become possible through platforms like yours and through APIs like mine, right? That the data becomes
easily accessible across. That's what I want to use. Yeah, exactly.
So you certainly have mechanisms that you can build that trust upon whilst instantaneously sharing it.
It's like the enablement of that trust happens through seamless flow of data.
Correct.
Because there is no reliance or requirement of calling in for anything. It has to be as seamless as flowing water so that you get data when you want it, you can look at it when you want it, and that trust builds up. And we've seen that working with our customers, that those customers have a certain degree of sincerity in the way they manage business data and how they manage the books, have been able to scale faster than those customers who don't take this data sanity so easily. I mean, so seriously. Their scale is not that. I mean, it's again
even from the user flow perspective. I happen to work with Paytm and HDFC Bank, and the way that relationship works, although the example is one of retail here in this specific case, you find the user entering the Paytm app and applying for things, providing data to an extent, and seamlessly connecting to an agent on the HDFC Bank side, where the video call is happening, where more data is collected, probably your KYC is done as well. And eventually that flowing through into a system at HDFC Bank and feeding back information back to the Paytm. And the user beautifully moved across these systems.
So it's all become more about user experience because I am used to consuming so many things. I find it's Netflix, for example, or Amazon Prime for that matter, is so easy to consume. Now, I don't have the patience if I want to, get a loan. I don't have a patience to work on a very shabby user interface. It has to be seamless. Otherwise, I mean, I'm talking about those people who have not even seen a bank where they used to go and sign up forms to open an account, right? Do you think those guys will even borrow from a lender who's not tech savvy? Definitely not.
Yeah.
I mean, because you guys have so many lenders.
I think an interesting point to that is that retail loans today can be enabled to you in under 3 minutes. I mean, the ticket sizes could be smaller. So a sub 20, 30, 40,000 rupee loan. But the ticket sizes have shrunk to as low as 3,000 rupees.
Low? 500.
Yeah, 500, 1,500, right? So maybe, maybe I'm not privy to that data, but yes, I'm sure. So people borrow that at that ticket size, and then that's enabled to you within 5 minutes.
Less, definitely.
Because there are these pre-approved models, and there is a wallet-based model that enables a cash balance to get transferred to your bank instantaneously via an IMPS transfer, right? So sub 50,000 loans could get disbursed under that. A 5 lakh rupee loan may take 3 hours. Right. But it just takes 3 hours. A 5 lakh rupee loan with the banks will still take you 7 days. 7 days, yes, or 5 days, right? So banks had a different call. They would have, lower ECLs, they would be more cautious because this is not their bread and butter. Correct. This is ancillary. But for a fintech or a smaller NBFC, they're trying to make a dent, in the.
They've picked up a space, they've picked up a domain.
That's the way you look at it.
Again, I think co-lending works there because, we've been also talking a lot about co-lending, understanding from our customers. This is again a priority sector. So if a bank has to, get the quota for a priority sector, fulfilled, either they do the actual lending or they buy the bonds. Because the bonds are actually less remunerative for them. But working with a partner in co-lending is a better option. So I think that's where again co-lending is a very good option.
Banks are evaluating partnerships with NBFCs today. When it comes to co-lending, there's a lot of interest around it. The traditional banks wouldn't want to take names, but traditional banks also are looking at. And there is a lot of interest, right? So that's the segment that's exploding.
And I think one of the areas that they do well is when it comes to branch-based situations or business correspondent situations.
Yeah.
And I actually see tech being adopted there as well, and especially the same QR codes we ubiquitously pay with, you find them appearing in branches. You can start journeys completely online with the forms, etc. So you digitize from the get-go.
Yeah.
And not to mention the fact that you've done this online, you're able to get stuff from all the systems I mentioned, like account aggregators, GST, etc. You're also able to now look at the business correspondents themselves as a mechanism of spreading this information through their smartphones, right? They're able to reach the last mile so easily.
They're able to serve the customer there because they're able to use the APIs, the transaction data, everything flows immediately back to the mobility interface as well. Even for that matter, the data that Bureau provides or the alternative data, it is happening as we speak. As the application progresses, the APIs are doing the magic in the background, the data is being pulled back and the customer gets the result.
Correct.
Because there is no, that's the most difficult time, right? Once you write the examination, then you need to know the result. It's the same with the borrower. That, once I've applied for loan, what is the going to be? It's instantaneous again.
Yeah, and interesting that this started to some extent with co-branded cards. That you start a journey from your Amazon app, seamlessly it flows through, you get an ICICI Bank, Amazon card within a matter of a couple of days, no documents required. It's extending to MSME lending now. It's extending to agri lending now, the BC model, but actually, bank representative visits a farmer, gets the documents on the app, and to a large extent, it's docless. Again, depending on the ticket size. And now there are some frontiers like education loans, for example, where we have still not cracked the model. But there again, there's a big market potentially. There is a demand, that supply is not being met, and this kind of innovation can really change the game.
There are education lending firms which are not looking at traditional data.
Yes.
They would look at a lot of factors which corroborate or point to the fact that, and they are keeping their NPS down to 2-3%. In fact, in some cases, almost zero, because they all pay.
Yeah.
And they pay early.
Because there's a social obligation.
Absolutely. There is DOSC, danger of social embarrassment. And it's just different strokes for different folks.
Yeah. Just to add to that, payment banks, small finance banks, and these categories of banks actually are amazing when it comes to financial inclusion.
Yeah.
And whilst there is a certain India which is comfortable with smartphone, that itself is, 2 Europes or whatever, in terms of size, there's a definite, India which is beyond that you can access through these entities. And I find some of them are actually fairly technically advanced. So it's something that you have to understand that they get the dhanda well, and when they start adopting tech, they can work wonders too. So I see their access and their way of doing things as not totally irrelevant. I actually find it very relevant, and once they start adopting tech, they can be really quite powerful as well.
Because again, there is agility. With those smaller NBFCs or lenders who are working in the tier 2, tier 3, tier 4 towns are very agile. And if you've seen the usage of smartphones as well, or technology has been at the bottom of the pyramid, has been very fast.
That's right. Yeah.
Graduated to internet. So there are so I'm a Gen Xer, right? So I'm sure Riju is too. So we all graduated at a point where we witnessed internet through dial-up, then you had broadband, then you had fiber optics, and I still remember the modem dial. Correct. Yeah.
People happen to be
It's going through analog, so modem would convert that to analog to digital, etc. And then you're connected to a BSNL connection. I remember that.
used to wait.
Oh yeah, and then browser opened. I said, oh, I'm now connected to the internet.
And it is Internet Explorer.
Absolutely, indeed. Right. So, and then in the last 5 years, you've got situations where you would have a hotmint which would have a dish, and then there will be they may not have power, but they would have a smartphone.
Yeah.
So their first access of internet is through a smartphone. And this was 5 years ago.
Yeah.
Right. So I think that has really changed the way inclusion has happened, because a lot of services could then be put. Benefits, direct benefits transfer is only possible because you had the Aadhaar stack.
And actually, the other interesting development is WhatsApp itself, right?
Absolutely.
Think about how
Communication has
people
changed.
do commerce these days.
Yeah, commerce is all
Yeah, commerce is there.
Big commerce happens today.
So
on WhatsApp.
Yeah, absolutely. Yeah, so I could use WhatsApp to make a payment,
Yeah.
receive a payment. I mean, they're essentially all running on the UPI stack.
Yeah.
So that's a rail.
And probably many interfaces today are WhatsApp enabled in terms of even applying for a loan. So it's easy to figure out journeys today in that manner. I'm not very sure of to what extent these have been localized to local language, but I don't think it's impossible. It's fairly possible to get into a dialect or Tamil or Telugu language.
There is work happening for sure on this.
Interesting, analogy is that Spock2 is a group company of ours.
Yeah.
Is essentially a collections company, and it has collection service in vernacular, in vernacular.
Yeah.
So there are multiple languages it supports.
Yeah, it's definitely possible, because communication is being enabled in multiple
What is
languages.
called as bhasha.
Yeah.
So it's there. So that innovation is already happening.
Yeah.